Hello and welcome to this session in which we will discuss the Limited Liability Company LLC. LLC is a business structure that offers two significant advantages to its members, which are the owners. The owners are called members. LLC is basically a hybrid form of structure. What do we mean by hybrid? It has a limited liability protection. Like a corporation, similar to the shareholders in a corporation, the members of the LLC, they have a protection, a limited liability protection. They're not personally liable for the company's debt and liabilities. And this is very similar to a corporate structure. It's a good thing to have. This means that even if the LLC faces financial difficulties or legal issues, the personal assets of the members, like their homes, cars, personal bank account, are protected. So that's a good thing. The other thing that's good about an LLC is it's a pass-through taxation. Although it's a company, you would think it's a corporation. Well, nevertheless, by default, an LLC is taxed in a manner similar to a partnership, which is a pass-through. This means the profit and losses of the LLC pass through to the personal tax return of the members. Therefore, the company itself is not taxed. The company is not taxed. The members report the business financial results, which is the profit, on their personal income tax return, and by doing so, you're avoiding the negative double taxation. Negative means a disadvantage of double taxation. So, an LLC provides limited liability protection, one. Two, it's taxed as a pass-through entities, and that's why it's a hybrid. It has the features of a corporation when it comes to liability protection, and it's taxed like a partnership. So it's both. It's a hybrid. Now, it's important to note here that this is the taxation as a default tax rule. You can tax an LLC like a corporation if it's more beneficial to the shareholders, to the members. They do have this option. Let's go ahead and discuss the LLC a little bit more in details. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Well, what we have to know about the LLC is there are two primary sources of governance when it comes to the LLC. There is the state laws governing the LLC, which are called LLC statutes. I'm going to call them the state laws, and the operating agreement that's created by the LLC members. So how can you run an LLC? Well, you could use the state law governing LLC rules. This is a set of laws enacted by the state that outline the basic legal framework for all LLC. It includes how the LLC is formed, operated, and dissolved. Simply put, the state, they have their own kind of, in quote, catalog or a book to show you how to start, operate, and dissolve an LLC. You can follow that. Or you can follow an operating agreement. What is this operating agreement? This operating agreement is created by the members of the LLC, by the owners of the limited liability company. This is an internal document created by the members of the LLC. It specifies how the LLC is operated, such as the distribution of profit, management structure, procedures for resolving dispute, so on and so forth. The operating agreement is tailored to the specific needs and preferences of the LLC members and can be altered. So rather than following the state, the laws enacted by the state to run an LLC, the members themselves, they can create their own operating rules. The key here is this. The key point to understand is that while the LLC state laws provide a general legal framework, then the members of the LLC, they have the flexibility to create their own operating agreement with provision that differ from that. Now, if there is any conflict between the operating agreement and the state laws, the terms of the operating agreement will prevail as long as they're not in a violation of the law, of course. And this flexibility allows LLC members to customize the governance, how they want to run the company to suit their specific needs. Also, operating agreements are not usually filed with the state. Therefore, they can tailor them in any way they want to, and they may not even to be in writing, according to the Uniform Limited Liability Company Act. They don't have to be in writing. So let's start by forming an LLC. To establish an LLC, guess what? You have to file with the state. We have to file articles of organization. There's a specific word for it with the state secretaries. You will declare in them you are interested in forming what? An LLC, a limited liability company. You must clearly state that the entity formed is an LLC. You have to mention the name of the LLC. The official name of the business must be included, like the company name, LLC, or limited liability. What should be included in this articles of organization? The physical address of the LLC's office. This doesn't have to be the business doesn't have to be where the business operate, because it could be registered in another state for legal purposes. Also, the name of the registered agent, a person or service designated to receive legal document on behalf of the LLC must be included. Usually it's the lawyer. How management is structured. If the LLC will be managed by specific managers as opposed to being managed by all members, or is it only specific members? We'll talk about this shortly. This must be included also in the Articles of Incorporation. This declaration outlined the governance structure of the LLC. Also, name of the managing members. If the LLC to be managed by certain individuals, their name should be listed in the Articles of Incorporation, Articles of Organization, not Incorporation. This is especially relevant if the management is not vested in all members, but in specific appointed managers. We need to know their names. So these are the elements that make up the core, the majority of the articles of organization, forming the legal foundation of the LLC. And obviously those requirements will vary from state to state, but these are the general component that most states will require to form an LLC. Now let's talk about the management structure. This is important. The management of the LLC, the operating of the LLC can be structured in two primary ways depending on how management is organized. It can be organized as member-managed LLC. What is member-managed LLC? Every member, every owner has the right to take part in management decision. Simply put, all the owners are managers. Unless the article of the organization or the operating agreement specify otherwise, this is the default structure. Simply put, if you are a member, you are an owner, you can manage. And a member manage LLC, each member acts as an agent of the LLC. The business, the LLC, is the principal. You are a member, you are the agent. This means they have the authority to make decision and enter into agreement that legally bind the LLC, as long as these actions obviously are related to the business operation of the LLC. So this is one way to have the management. The second way to have management is manager manage LLC. In this model, the LLC is overseen by appointed managers rather than by all members. Then here you are selecting specific people, specific members, and those are the managers. These managers could be members themselves, or they could be outside individual, just hiring a person to manage the company, to manage the LLC. And manager manage LLC, each manager acts as an agent and has the authority to make decisions and commitment that bind the LLC. Simply put, the owners can manage it, or they can hire an outside individuals. The general members who are not managers do not have this authority. So if you are a general member, but you are not a manager, you don't have the authority to bind the LLC. And that's why they have to have the names in the articles of organization. They don't participate in the day-to-day management and cannot bind LLC through their action. That's why you need the names. The choice between a member managed, it means all the members are, and manager structure depend on the various factors, include the size of the LLC. Do you need outside management, or you're good to go? The number of members. Do we have enough? We don't have enough. Maybe some members, they have other commitment, and the members desire to be actively involved in managing the business. You might be a member, but you don't have time. You have some other responsibility or responsibilities that you cannot be an active manager in the LLC. So this choice affects how decisions are made and who has the authority to act on behalf of the LLC. This is when it comes to management. How about voting? Who can vote, and what's the voting power? Well, voting strength proportional to the contribution. Simply put, you vote with your money. In many LLCs, member voting power is directly proportional to their contribution of the company's capital. For example, if a member contributed 5% of the LLC capital, they have a 5% of the vote in a company's decision. So the more money you contribute, the more saying you have in the company. How about profit and loss? Well, that's also allocated according to the contribution, just like voting. Typically, the profit and loss of the LLC are divided among the member based on their respective contribution. The more you contributed, the more profit you make. Now, under the Uniform Limited Liability Act, which only had a few states follow, profit are shared equally among all members regardless of the capital contribution. Again, because some states may differ. If that's the case, that's the case. This can be altered if the LLC articles of the organization or operating agreement specify a different method of allocation. Again, the operating agreement can nullify this, and they can contribute the profit and allocate the loss in a different percentage. How about transferability of ownerships and right? How easily transferred or not transferred means selling your share, selling your interest, or assigning your interest. A member cannot transfer their entire interest without the unanimous consent of other members. Well, you have to have the consent of other members. However, a member is usually free to assign their financial interests, such as the right to receive profit or proceed upon dissolution without such consent. Well, if it's dissolution, it's going away, you can do that. Okay? And this aspect of the transferability is similar to a partnership. In a partnership, you need unanimous consent. Same thing at LLC. You're going to see in corporation, it's different. Can members inspect books and records, accounting record? And the answer is yes. Every member of an LLC has the right to inspect and copy the LLC's books and record during regular business hours. This ensures transparency and allows members to stay informed about the LLC financial status and business operation. Obviously, if you're a member, you're an investor, you want to know what's going on, you have the right to inspect the books and the record. LLC termination. The termination or the dissolution of an LLC can occur under several circumstances. One, the project is finished. If we are formed for a specific project, expiration of duration, it's done. If the LLC articles of organization specify a period for the LLC existence, it will dissolve when that period ended. Consent of all members. Well, we all decided we're going to go ahead and dissolve this LLC. The unanimous decision is a common method for voluntary ending of the LLC. It could be event leading. Certain event like the death, retirement, resignation, bankruptcy, or legal incompetence of a member can lead to the disassociation from the LLC. And if such an event occurred, the remaining member can choose whether to continue or dissolve the business. The departure of a member does not automatically dissolve unless the remaining members decide not to continue. Also, how can we dissolve a business? By law, judicial or administrative decree. If the LLC is found to be in violation of the law, a court order or administrative decree can mandate the dissolution of the LLC. Let's take a look at this multiple choice questions from farhatlectures.com. How can a member of the LLC transfer their ownership right? Freely without any restriction. Can you just sell it without any restriction? No. The LLC is more like a partnership. What do you need? You need the consent of other members. B, only with the consent of all other members. This looks like a good answer choice. Through a public stock exchange. No, LLC are not publicly traded. Only after a lockup period of 5 years. There is no lockup period. The answer, only with the consent of other members. It's a little bit more restricted. It's not like a corporation. Don't confuse company with corporation. It's a limited liability company, but it's a hybrid. It's like a corporation from a liability perspective. It's a taxation from a partnership perspective. When it comes to selling your share, transferring your share, it's more like a partnership where you need the unanimous consent of other members. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you do what? Help you prepare for the CPA exam. Good luck, invest in yourself, and stay safe.